So, welcome to today's presentation. My name is Peter, a senior market analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. We're going to be mixing technicals with fundamentals today. So, with no time to waste, let's start. We note that there was a slight remarkable correction. Practically, that was on Friday. It was characteristic that on Friday, practically the price action remained unchanged. Let me drill out to the daily chart. You can see how little the change was on Friday. Back to the 4-hour chart. And the main characteristic of the day was the release of the core PC price index. That was for June. I would be noting that practically the release highlighted once again the easing of inflationary pressures within the US economy, given that it had slowed down, maybe even a little bit beyond expectations. And that was a signal which more or less tended to boost market expectations that the Fed will be remaining on hold from now onwards. I would be even noting here that we may see also market expectations for the US economy to be able to skip a possible recession also getting a boost. It's quite interesting, and I would be highlighting this practically the scenario, as that would have an effect besides the FX market, the US dollar index, also in US stock markets, etc., etc. For the time being, we tend to maintain a bias for a sideways motion, given that the R1, despite this, I would say, forced break, but it was an open. And I would expect the index to remain in sideways motion just below the R1, 101.6. On the other hand, note how the RSI indicator remains above the reading of 50. It's actually right now at almost 59, which tends to imply some slight bullish tendencies. Should the bulls take over, I would expect the price action to rise, break the R1, 101.60, which served the index well in the past 48 hours, and start aiming for the 102.60 resistance level. To the downside, and should the bears take over, we may see the price action dropping, breaking the S1 100.80, and aim for lower grounds. Okay, let's have a look at Euro USD. Let's clear the chart. Let's reposition the labels. And let's zoom in a little bit. That's a little bit too narrow for my taste. Okay. Now we have a wide drop of Euro USD, a correction higher, and even some stabilization just above the 1.1010 support line. So that holds, but definitely this has to go and to be turned into a resistance line. Let's go hunting for a new ultimate resistance support level. I would be highlighting these shows here. I think they're clear cut. You can see how it was aimed for here, tested here, and here. To make things a little bit clearer, let's delete the prior triangle. Here you go. And that would be in green. The 1.0835 support line. Let's correct also the labels and widen the chart a little bit. That's it. Bring this a little bit forward. Becomes more visible. All of this is important in the sense that whilst trading, it's important that you get a very clear picture at a very short time frame, at a very short period of time, within seconds if possible, of where the action is moving and where it could be leading to. That's why we insist on having clear labels, the interesting support and resistance lines, etc. Okay, let's correct the labels, starting with the S3, which is now being R3, which is now being placed at 1.1275. The R1 at 1.1185. That's the R2. The R1 is being placed at 1.1090. The S1 at 1.1010. And the S3 that's 1.0835. The S2 at 1.0925. And last but not least, the ultimate support line freshly set at 1.0835. Let's lock everything in. Now, definitely the downward motion was interrupted here. That's a clear-cut movement, which there's no hesitation here. It's interesting also how the 1.1010 practically provided support for the pair. Now, there were some voices which tended to discuss the possibility of a bullish outlook. I think that's still a little bit premature. For the time being, we're tilting more towards a bias for the sideways motion to continue just above the S1 1.1010, and we're basing this practically on two elements. The first element is that, okay, we have higher truths, but for the time being, there are no considerable higher peaks. While on the other hand, the RSI indicator has risen, yes, definitely that's clear, but it still remains below the reading of 50. So that does not exactly provide confidence in that. I would expect the price action to remain just above the S1 1.1010. However, I would be highlighting here that we have a euro which may be somewhat in a wait-and-see position, given that we had a number of financial releases which were with high impact, and you can see that there was little market reaction as such. It's on a more fundamental level, I would be noting that there are substantial worries about the economic outlook of the Eurozone, especially about Germany. And that tends to imply more or less that we may see that outlook, that pessimistic outlook, practically weighing on the common currency, or at least clipping its gains. At this point, I would be noting that we had from the Eurozone just about 20 minutes ago the release of the HICP rate, which slowed down as expected for July from 5.5 to 5.3%. It's the headline HICP rate, while the GDP rate slowed down, yet not as much as was expected. It was slightly higher. It was expected to come out at 0.5% year-on-year. It dropped only down to 0.6, not much of a difference. Practically, the worries for the Eurozone economic outlook tend to be maintained. We have a number of factors which are weighing. We have social unrest partially. We have a heat wave, which was also highlighted. And I would be highlighting especially the tight monetary policy outlook of the ECB, which is expected to be prolonged and could weigh on growth even further. My interests have already started to shift from inflation, which used to be the case, now towards growth, and especially Germany's growth. And it was characteristic how last week we saw Germany's manufacturing PMI figure, it was the preliminary figure for July, coming in very low at 38.8. Mind you that Germany's manufacturing sector could be characterized the spearhead of Eurozone's economy, and performing that poorly regarding economic activity is very, very worrisome. Nevertheless, should the bulls take over for Euro USD, I wouldn't be surprised to see the price action rising, breaking the R1, 1.1090, and start aiming for the 1.1185. On the other hand, a possible bearish outlook may force the price action lower, breaking the S1 1.1010 and start aiming for the 1.0925. Once again, our base scenario for now is that the pair will maintain most probably a rather sideways motion. Once again, though, I'm highlighting that Euro USD seems to be more USD driven, given that we saw a number of financial releases, high impact financial releases from the Eurozone, which had little effect on the Euro USD as such. Let's have a look, say for example, at Eurozone's GDP and HICP rate 20 minutes ago. This is it. This is the minute chart. At the moment of the release, the market reaction was only at 7 pips, more or less, which was characteristic that the release as such, because it was largely within market expectations, may not be the exact pinpoint, but that was what was expected, a lowering of growth and an easing of inflationary pressures. Okay, let's have a look at GBP/USD. Allow me to clear the chart first. Let's reposition the labels. You know what? I would be widening a little bit, zooming a little bit to the chart, allowing us to have a better view. Anyway, I think that the trade-off between detail and history is worth a while here. It's a very, very similar picture to the Euro USD pair, but I think this time the sideways motion is even tighter. It's characteristic that the RSI indicator is even closer to the reading of 50, implying a rather indecisive market for the pair. So I would be maintaining a sideways motion bias, with the price action revolving practically around the 1.2850 support line. More or less, should the bulls take over, I would be highlighting this peak here, which also marks the first resistance line in my opinion. And for bullish outlook, I would require a higher peak than this one. So the R1 has to be broken, the 1.2995, and the price action has to start aiming for the R2 3140. For the time being, let's delete this. There you go. On the flip side, should the bears take over, I would expect the price action to start by breaking the 1.2850 support line. However, I would like to see it dropping below the 1.2730, the S2. Just breaking this one is not enough. It's clearly not enough. It's already at that level. So we would have to see the price action moving decisively lower. And definitely we are going to be requiring a lower truth on this one. Let's have a look at USDJPY. Okay, let's clear the chart once again from all the doubles. Let's reposition the labels. Now here we have a clear example of a bullish outlook. And this, interestingly enough, the price action has moved decisively higher, breaking the 141.35 resistance line. Now we have to turn this into support line. Let's go hunting for a new ultimate resistance level. Going back. USD practically JPY has suffered from BOJ's interest rate decision and the idea of a more flexible a more flexible yield curve control policy, which would be also, in my opinion, managing market reactions. It's not a big shock in the sense that they didn't go for the clear-cut 100 basis points tolerance level. They allowed for an additional 50 to be inserted practically without that being specific. So BOJ may once again intervene in the market by buying Japanese government bonds should it see such a scenario fit, even if the yields of Japanese government bonds is at 0.5%. They do not have to go up to a full 1%. So that provides a considerable, I would say, flexibility, actual flexibility to the bank to intervene in the markets without causing a fuss. We have a very steep upward trend line, and that's some way of an issue. By the way, we have to correct also the labels. We didn't do that, we have got that. And we're making a start with the S3, which is now being placed at 137.25. The S2 at 139.10. The S1 at 141.35. Sorry. The R1 at 143. The R2 at 145.4.65. And the R3 at 146.55. So on the one hand, I think it's pretty clear we maintain a bullish outlook for the pair as long as the upward trend line remains practically intact. Note the RSI indicator, though, which has risen, has reached the reading of 62, 63, and seems to be stabilizing a bit, allowing the pair to correct a little bit lower. Now this correction is a little bit dangerous in the sense that the price action has breached the upper Bollinger Band. So that makes the scenario of a possible correction lower even stronger. For the time being, we're intending to treat such a correction as just that, a mere correction lower, before the pair regains some bullish tendencies. However, that may shift the upward trend line we have just drawn, and which is quite steep, practically to the right, if not even break it clearly. Should the bulls maintain control, which is the base scenario for now, we would expect the price action to rise, break the R143, and start aiming for the 144.65 resistance line. On the other hand, a possible stabilization would be marked by the price action dropping, or if you prefer stabilizing. The main element here is clearly breaking the upward trend line and at the same time respecting the R1 and the S1. On the other hand, should the bears take over, we may see the price action dropping, breaking the upward trend line, once again signaling that the upward motion has been interrupted. But for a bearish outlook, that's not enough. We would require the pair to drop below the S1 141.35 support line and start aiming for the 139.10. Let's have a look at USD CHF. Let's reposition the labels. Okay, we note that, first of all, let's zoom in a little bit. We note that the R1 0.8680 has been broken. So we're switching that into support line. You can see how it has already started to provide support for the pair, limiting the downward motion, allowing it to float in a sideways manner. I would be highlighting a little bit off guard this price support line, was also tested here. It's a little bit wide, but it's pretty valid. Okay, we're not talking about the exact value. The exact value is 0.8908. Let's try 0.8910. Yeah, seems good. So widen the chart a bit. Starting with the S3, which is now being placed at 0.8520. The S2 at 8590. The S1 0.8680. The R1 at 0.8755. The R2 at 0.8820. And the R3 at 0.8910. For the time being, we tend to maintain a bias for the sideways motion to be maintained, to be continued. And we highlight the fact that the price action was not able to make a higher peak than this one. On the contrary, the next one is a little bit lower. At the same time, though, it seems that the S1 is providing some support, the 0.8680. So we'd expect to see a sideways motion between these two levels. Should the bulls take over, I would require practically for bullish outlook the price action to rise, clearly break the R1, 0.8755, and aim, if not even test, the R2, 0.8820. That would allow us also to draw a nice upward trend line, which would be showing us also the limitations of the upward movement. On the flip side, should the bears take over, we may see the price action dropping, breaking the S1, 0.8680, and start aiming for the S2, 0.8590. Okay, let's move to AUD USD. It's to be the last pair. Allow me to clear the chart first. Definitely we have to find a new ultimate support line, as the S1 has been broken and now has been turned to a resistance line. I'm considering, despite the false break here, that the S1, S2, now S1 is still valid. Let's unlock the chart, go further back. That's a little bit too wide. I would be setting a median here. Okay, in green, 65, 0.6530, locking it in. Let's correct also the labels. Starting with the R3, which is now being placed at 0.6890. The R2 at 0.6805. The R1 at 0.6730. The S1 at 0.6655. The S2 at 0.6595. And the S3 0.6530. Once again, we note the upward movement of the pair over the past 24 hours. Yet, I'm still not quite convinced about the bullish tendencies. I would like to see it breaking above the R1, 0.6730. That would be one indication, which would cause me to quickly adopt a bullish outlook. On the other hand, I would also like to see the RSI indicator, which is currently at 44, to clearly break above the reading of 50, implying a rather bullish sentiment. Despite it's already rising, there are some preconditions there for bullish outlook, but for the time being, that's not enough yet. I hope that you found it useful. From all of us here at IronFX, best wishes for solid trading.
everyone, welcome to another of our informative videos. Today we're going to look at balance and equity. Balance is the starting balance of your account. It basically refers to the amount of money you have in your trading account. If you deposit $1,000, your balance will be $1,000. If you open a new position, your account balance will not change until you close the position. Your balance does not include any profits or losses you might have from any open positions. If you have open positions, your balance amount depends on the losses or gains you've made once you close your trade. So basically, your balance will only change when you add more funds to your account, or when you close a position, or when you keep a position open overnight and either receive or pay swap fee. The balance amount is shown in the MT4 terminal window below the Trade tab on your MT4 client terminal. Let's also take a look at equity. Equity represents the current value of your trading account and fluctuates with every tick when looking at a trading platform on your screen. It is the sum of your account balance and all floating profits or losses from your open positions. In other words, equity refers to your balance plus any profit or loss from open positions. However, if you don't have any open positions, then your balance will be equal to your equity. Then equity amount is shown in the MT4 terminal window below the Trade tab on your client terminal. Your equity continuously fluctuates with the current market prices as long as you have open positions. As your current trades go up or down in value, your equity does the same. Thank you for watching.
I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K And then to get the signal line, we smooth the data further by applying another X period moving average to slope percentage K. And now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slope percentage K and the slope percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5, 3, 3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings more than 80 will indicate the price is near its high, and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we're looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right, so let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel, a bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see the price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candle wick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support turn resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards the resistance on the bigger time frame, like on the weekly, price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 2, 7, 2 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see is there any chance of divergence. No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. It's a Franken. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. Daily Slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry. 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.